So thank you very much to our sponsors. We're going to be talking about money tonight. And money is a very important thing in all of our lives. And you can test and measure to your heart's content, and it's the only way really that you're ever going to find a way to get ahead in this life with money. And that's by testing and measuring. It reminds me of the story of the two hunters that go for moose up in northern Alberta. And after they've done their hunt trip, they try to load up on the plane, and the pilot refuses to allow them to put the moose that they've bagged onto the plane because of weight restrictions. Eventually, the two hunters convince the pilot to go ahead and take the moose. And of course, the plane takes off. It barely clears that first stand of trees. And the second stand of trees is a little higher, and it doesn't quite make it. Clips off some of the wings, they take a tumble down into the snow. One guy gets hung up on the tree, the pilot and the other hunter are down in the snow. And the guy goes down, he calls down, he says, "Frank, you okay?" He says, "Yeah, I'm fine, Joe." Frank says, "How far do we make it?" His buddy looks up and says, "About 40 yards further than last year." Tonight what we're going to be looking at is some testing and measuring on how you can look at your own finances with some raw, ragged, perimeter edge things that are not quite socially accepted yet. We're going to be talking with Dan Giercke on colored diamonds and some... Is it colored diamonds tonight?
That'll be a big part of it, yep.
Colored diamonds and gold and silver, I understand. Is that true?
All those pieces.
Okay, fine. And then we're going to be talking with Chris Brillo on some tax strategies that you perhaps hadn't thought of to help you in your finances. We have Lori Meyer with Net Wealth Strategies, who can show you some interesting things that banks won't tell you. And then we have our last speaker is Robin Costello with Currency Connect. Very fascinating stuff on things that are going on with foreign currency exchange. One of the things we're going to do just before we take a break after our first two speakers is we have Giercke with Canada REIC to talk about an event that he has, so I'm looking forward to his announcement on that. Dan Giercke and I have known each other now going on a year and a half, I believe. And we've been doing... I'm amazed with this gentleman simply because of his stick-to-itiveness with what he wants to do in his life. He has studied this stuff that he's about to present to you tonight. And I'd like you to give a warm Calgary hello to Dan Giercke tonight. This is great stuff. Come on, Dan. We have half an hour for Dan's presentation, by the way.
All right. We'll get rolling then. Thank you, Rick. Good evening, everyone. Thanks for coming out tonight for our third in the Thrive Financial Empowerment series. And tonight I had planned to give you a talk on natural fancy colored diamonds. And I had the good fortune to have one of my mentors come into Calgary today. So I've asked him to come up and do part of the presentation with me. Brad Fisher's a gentleman that I've known for a number of years. He's a mentor of mine. He's somebody that I've learned a lot from. And he started investing at the age of 16, bought his first investment property at 16, and by the time he was 25, he was financially free. And ever since then, he's dedicated his time and efforts to helping others become financially free and teaching financial education. And for that, I want to welcome him up here with me so that he can give you a bit of the information that I've been fortunate enough to hear from him, and to share some of these strategies of the wealthy that aren't mainstream. They're under the radar in large part, and yet they're very applicable in the times we're in today. So if you would, please help me welcome Brad Fisher.
Okay. And thank you all for letting us present to you tonight. We have a very, very powerful, special message to share with you. One that is of large urgency. It's a 2.5-hour presentation, so I'm going to have to speed this up very quickly. So if you could with me, take notes, grab a pen and paper, recorder, whatever you have, to jot as much information down as possible in the short period of time that we have. And I'll try my best to touch on the diamond thing, but what I really want to hit home today is the power of a wealth cycle and the urgency behind it. See, Don't forget these two words, or few words that I'll share with you today. The two words is perfect storm. The other sentence, I guess, would be everybody in this room will likely witness the largest and greatest move of money they have ever seen in their entire lives. I kid you not. And tonight I'm going to share that with you. And again, because we're short of time, I got to get rolling real fast. But I want to really stress the importance of this urgency. And what I don't get done today, you do have a sheet on the very back. There's things to check off. Dan will be sure he gets back to you on more information that I haven't been able to hit on. And maybe that might be the diamonds. I'll go as quickly as possible. So with that, I'll begin. Thanks for the introduction, Dan, and thanks, Rick, as well. Okay, so one of the things that I've learned about the ultra-rich and wealthy people is out of 7 billion people on the planet, there's only a handful of billionaires. There's only about 1,200 of these people. And I've studied them since I was 17 years old to find out what it is that they do differently from you or I. And one of the things they do differently is they leverage themselves. Their ability to produce results, they leverage. There's not one billionaire that have been able to find that hasn't used leverage in some way, shape, or form. And the only one we'll have time to talk to about today is the ability for them to leverage in terms of timing. When I talk about timing, I'm talking about wealth cycles, I'm talking about financial economics, and I'm talking about history. Timing is powerful. It's like if you had a rusted out dinghy or a high-end yacht in the ocean. Doesn't matter what the two look like. When the tide comes in, both float to the top. That's the most powerful thing. It is the cycle when it comes to investing. So I want to teach you guys quickly tonight, not only about the urgency, but how you can literally predict your financial future by knowing financial economics, history, and wealth cycles. And let's begin because we're short on time. Okay, so when it comes to financial economics, history, and wealth cycles, what I want you to know is since the 407 BC in Athens. And Dan, if you can find these slides, that's great, but I'll keep going.
I guessed right.
Oh, you did? Perfect.
Yeah, we're good.
Oh, wow. Good job, Dan. Okay, so back in 407 BC in Athens, that was when you had your first democracy where government started printing and devaluing and debasing money. It started back then. They actually injected their silver coins with copper and other metals. It started then. So what's interesting is you can go back about 2,400 years, and what you'll find is that there's been 3,800 fiat government-issued currencies that have actually collapsed and that have actually failed. Isn't that crazy? There's not one currency that has stood the test of time. As soon as the government takes a gold and silver backing off of a paper dollar, there's no accountability at all. They begin to print and print and print, and before you know it, that currency is worth very little, nothing at all, and then it starts over again. Guys, this is just history repeating itself. It's very, very serious. It started back then. But what I want you to know is, since then, there's been 15 to 20 year, around 10 to 20 year, but let's say 15 to 20 year, wealth cycles. And this is what you need to know. Where stocks and real estate rival back and forth with commodities. This you need to know. So what will happen is commodities will have their run in the market. They'll come back to try to find their balance point, and then they'll go to this extreme. So they go back and forth. Another cycle that you need to know of is what's called a Kondratiev wave. It's the average life expectancy of a human being, and it's somewhere around 50 to 60 years. We're in right now that's somewhere around 75, 80 years. But this is a Kondratiev wave, and the reason why you need to know these is because these are huge cycles of money. They call them super cycles, is another term for it. But what's interesting is, you guys, we're coming up against two of these at the same time. At the exact same time, we have a small cycle, these 15 to 20 year cycles, coming up against one of the largest and greatest super cycles we will ever witness. So they're all coming together, creating this perfect storm. And I'll give you an example throughout history. Throughout history, if we look at an example, if we go back to 1970, if we were a sophisticated and educated investor, we would have known that it was the time for paper assets like stocks and mutual funds. It was over, but it was the beginning of a commodity wealth cycle. And if we knew that, we would have been bullish in commodities. And here's what would have happened. From 1970 to 1981, you need to know this, we had a little this one was a 10, 11-year cycle, but we had a little cycle in here of commodities. Now, if you bought gold at $35 an ounce, about 11 years later it was $850. That's 26 times. The average commodity, somewhere around 26 times it increased. Now take your net worth in your mind, if you would. Don't yell it out, but just take that number, whatever your net worth is, and times it by 26. Isn't that amazing? Isn't that a huge number? That's the power of a wealth cycle. And if we understood this cycle, we could have capitalized on this. We also would have realized that at the end of 1981, it was the end of the commodity cycle, but the beginning of a real estate and stock cycle. So if we look at this, from 1981 to the year 2000, the Dow went up about 14 times. That was pretty good too. And at the end of year 2000, a lot of you recall the dot-com crisis, right? And one that stood with me and will stand with everybody for quite some time is September 11th. Who remembers in the room where they were when they saw those two towers hit the ground? I'll never forget the day I was sitting in a place and I just was looking at like a dozen people crowded around a computer screen trying to look over top of their shoulders and watching these two towers fall and watching our stock do the exact same thing. And so that was the end of this stock rally. And then guess which cycle we went into now? Commodities, right? And from the year 2000 until now, we've seen them creep up about 5.5 times. So really, we're at the start of this, 10 to 20 year baby cycle that's starting now. We're literally at this point here on the hockey stick, if you will, and it's ready to go through the roof. On top of that, we have a super cycle, a Kondratiev wave, and I'll explain that next. Before I go a little bit further, I want to touch on my favorite point here. Here's an example. In 1970, if you invested outside of the cycle and you bought real estate, it still wouldn't have been bad for you. Real estate's a great investment. But if you put $20,000 into a piece of real estate back then, 11 years later, it would have grown to about $40,000. It would have had a 100% return. Not bad, right? Because historically, you double a single-family medium-priced home every 10 years. So not bad. But if you understood wealth cycles, financial economics, and history, you would have known that it was time for commodities as the bull market. Had you had put $20,000 into silver, just giving you an example, I don't know if you can find that one, Dan, it's in there somewhere. But 11 years later, that investment would have grown to $770,796 by 1980. You would have made a 3,600% return on your money, and you would have been able to buy 18 homes instead of doubling once. That is the power of understanding wealth cycles. That's what I really want to hit home today, because not only are we coming up against another one, but on top of that little one is a Kondratiev wave. Now let me talk about the Kondratiev cycle that's coming real quick. Whether we like it or not, there are 3 big events coming down the pipe in our economy. These aren't opinion, but rather they're fact. Anything that we share tonight, just quiz up Dan and he can source any information I'm giving you tonight. There's 3 big things coming, creating this perfect storm. Number 1 is the second subprime wave. We had a first subprime wave back in 08 and 09 where we saw the S&P 500 drop about 50%. It was not a good year. What people don't realize is that event occurred because way too many people bought and built homes that should have had them in the first place. But what they don't realize is the second wave is on its way. We're in it right now. And it consists of commercial properties, where just like the first wave, people bought way too much. These mortgages reset at new rates, they couldn't afford it, and they walked away. That created panic and fear in the market. And so the same wave's coming up, which happens to be a little bit bigger, but it's in commercial property. So that's number one that's coming down the pipe. Number two is the, help me out guys, starts with baby and ends with a? Boomers. Baby boomers. Okay, there we go. Baby boomers. Everything they touch goes crazy. We look at Gerber baby food. You know, when they're teenagers, McDonald's, A&W, Wendy's. You know, out of high school and university, we look at the high interest rates. Anybody notice these big adult complexes that just popped out of nowhere? You know, everything they touch goes crazy. I mean, the minivan saved Chrysler, you know, when they started having babies. So here's the thing a lot of people haven't thought about. In the last 50 years, what have these baby boomers been doing? They've been working, they've been earning, and they've been saving. Correct? Now, where have they been putting that money?
Mutual RRSPs.
Thank you. Stocks, mutual funds, RSPs. Has anybody thought about what the next 50 years is going to look like? Will they be working, earning, and saving for the next 50? Or they will be taking out, semi-retiring, grandkids, Corvettes, Harleys, you name it.
Good luck.
Right? Wouldn't it make... You don't have to be a rocket science to know that, you know, there's 3 baby boomers for every one of Dan and I. Right? So if 3 people were putting money in a bank account for every one pulling out, wait a minute. What'll happen if 3 people pull out for every one putting in? Has anybody thought about the next 50 years? Now, conservatively, there's 75 million baby boomers. 75 million baby boomers, let's say they're ready to retire. If they take out $1,000 a month, that's 75 billion with a B. If another 75 million baby boomers take out $1,000 a month from their old age security, government pension plans, etc., that's another 75 billion. You know, if you add in the refugees, I mean, this number is about 84, but we're say 75 billion. Do you guys agree that $2,000 a month for the average baby boomer family isn't a lot of money to withdraw? You agree? But you know what? When you add this up, that's 150 billion a month coming out of 2 major institutions that at one time was actually going in. So, I don't have a crystal ball, guys, but this is going to cause some ripples. Some serious ripples in the economy. Okay? That's the second thing. Now, these two are a pretty big deal. But the one I want to hit home today, and I apologize if I don't get as much on the diamonds, that's going to be for Dan to do. You can, again, check off that information. He'll give you the material on that. I'll try to hit some of it. But what I want to hit home today, guys, is number 3. Because this is serious. And this is extremely urgent. Probably one of the... Like literally, when I go back to this, again, I'm going to say, you're going to see the largest move of money you've ever seen in your entire lifetime. I kid you not, and here's why I'll prove it to you. The U.S. government has printed more money in the last 2 years than the prior 100. I'll say that again. The U.S. government has printed more money in the last 2 years than the prior 100. And historically, when governments have done that, what it does is it collapsed a currency. They are printing $40 billion a month today, and they said they're going to do it till it's over. And there has not been one currency that has survived when people continue to pull off a hard asset and continue to just print it and print it and print it until it's gone. It doesn't last. And the average life expectancy, I've been told, is about 41 years. So President Nixon took the U.S. off the gold standard in 1971, right? The average life expectancy of a nation's currency when you remove a hard asset from it is about 41 years. So 1971 plus 41 years is what year? We're very, very close. We're very, very close. This is very serious. And why I say that this will be one of the largest transfers of money you've ever seen is because never before in world history has it been global like it is today. It's a global issue, not just a U.S. problem. You know, 70% of all the base money in the entire world, base money is what you put in your pockets. It's coins and it's bills. 70% of all that money in the whole world is US currency. So what happens when history repeats itself? What happens? When history repeats itself, what happens is the middle class typically get wiped out. Those that hold paper assets struggle, and money moves like it's never moved before into hard assets. And again, we'll just look at the 30s. The most amount of people ever wiped out were through the 30s, but the most amount of millionaires ever made were through the 30s also. So what am I here tonight? I'm here because I'm educating you. I'm preparing you for one of the largest moves of money you've ever seen. Because money doesn't disappear, it moves. And it moves from the uneducated person to the educated one. I want you to be on this side. Whether you do anything with us or not, you need to know how this stuff works. You need to know history, financial economics, and wealth cycles, and know which side of the wealth cycle to be on. Dan and I aren't gold and silver people. We're not real estate people. We're not diamond people. We're actually wealth cycles people. So we are aligned with some very influential, wealthy people. There's a billionaire family that we're connected to in Australia. They owned the largest real estate company in Australia. And these guys know things that are coming before we get to see it because they can spend millions on research that maybe we don't have. And so these are things that we see coming. So what you're going to witness is money move from one class of people to the next. And what we're seeing is a global shift from paper to hard assets. And that's where the diamond comes in. Because with the diamonds, I'll just touch on that a bit here, unless you jump in at any point in time, Dan.
Feel free.
With the diamonds,
I'll find the slides for you.
okay, for every 10,000 diamonds ever found, one is a natural fancy color. They are super, super rare. The largest mine in the world that produces 34 million carats a year is closing, and a lot of people don't know this, in 2018. It produces 90% of the world's supply of pink and 80% of the world's supply of brown, and people don't know this. It's called the Argyle mine in Perth, Australia. Google it when you go home. They'll tell you they're closing down in roughly 2018. And what does that mean? You'll not only see the largest move of wealth ever into hard assets, but you'll see the largest move of money ever into diamonds, because people are starting to clue in and buy these up like crazy. You got people like KPMG, Bloomberg, Royal Bank, Forbes, Sotheby's, Christie's, all saying the same things, that we're going to see the largest shortage in diamonds that we've ever seen before. In fact, just China and India alone, just two countries, increased the value of diamonds by 40% last year. Isn't that crazy? And just to give you a little bit on the commodity cycle, silver has gone up roughly 2 to 3 times its value in the last 2 years since we started buying. Gold's hit historic world record highs, and according to Bloomberg, diamonds have gone up about 5 times that of gold. But the exciting thing is, guys, if this is the hockey stick curve where commodities are, they're literally just at the beginning, because they haven't been into that 15, 20-year cycle yet. They haven't hit the Kondratiev wave yet, that super cycle, and the currency has not yet collapsed. So there's a lot of exciting things to share. I got to keep it really tight and close. Dan, do you want to touch on it?
Yeah, I was going to read off some of the quotes that some of these organizations that Brad mentioned have been saying about natural fancy colored diamonds and why it's a hard asset that you want to have. So I'll start off with Bloomberg. By 2016, global demand for diamonds will outstrip supply by 7 million carats. Now, I'm sure all of you are aware that we've got a couple of diamond mines up in northern Canada. The Snap Lake mine is one of the bigger producing ones. It produces 7 million carats a year. So essentially, pull their entire production out of the world supply. And this mine, the Argyle mine, produces, what is it?
90% of pink.
And what's their carats production per year?
34 million carats.
34 million carats. So compare that to the one in the north that's only 7 million. and both of those basically pulled out of the supply. Forbes, when times are bad, diamonds can hold their value better than real estate and have the advantage of being portable. They call it stealth wealth, or real estate in your pocket, because you can put it in your pocket and cross a border if you need to. It's portable. You can wear it on your finger. I mean, how many women are wearing a diamond on their finger? Most of them. And I'll bet none of them are wearing a natural fancy colored diamond, so that just shows you the rarity of them. For every 10,000 white diamonds, one is a natural fancy colored diamond. And finally, let's bring it home. Royal Bank of Canada says supplies of rough diamonds will fail to match demand driven by China and India over the next 5 years due to a lack of new mines. So there hasn't been a substantial new mine found on the planet since 2009. And that was in Africa. And the diamonds coming out of that mine are pretty much exclusively white diamonds. There really has never been another mine that produces colored stones like the Argyle does. And that mine closes in just a few short years. So in your handouts, you've all got an invitation to come to an event on March 12th. It'll be an opportunity to see that one of the rarest collections of colored diamonds in the country, possibly even on the planet. We've got the owner of Rare Investment coming for that presentation. He's the owner of Canada's largest colored diamond company. And it'll be an opportunity for you to come out and learn the whole story about colored diamonds, what they are, how to acquire them, what constitutes an investment stone versus your commercial grade that you'll find in a jewelry store or any other stone. So have a look at that handout. You'll notice on there are a few other events. The small forum, there's an event coming up on the 31st. Jim and Coral will be hosting that. They're here in the middle. Throw your hand up, Jim. 23rd. Is it? Oh, sorry, 23rd. That's right. I was thinking of the last. This coming Saturday, as part of the Money Mentor Academy. Now, this is a program I put together to share these under-the-radar investing strategies. I'm hosting an event with Canada's authorities on something called infinite banking. Now, this is a program to help you set up your own banking system so that you never need to go to a bank and fill out a loan application again. We're doing a workshop on Saturday afternoon from 2 till 4. Everybody that's here tonight can attend for half price. If you become a member of the Money Mentor Academy, which currently there's a 30-day free trial, so it's free, you can come to the event for free as well. So that's Saturday from 2 till 4. And then the diamond event, which is the one that I would love to see all of you at, is on March 12th. So mark those dates on your calendar. Please be sure to be there. You won't regret attending. And I think we're bang on time. So I want to thank Brad for gracing us with his presence this night and coming out and sharing some of his expertise with us. It's an honor for me to have him up here on stage. For some of you that have been here before, it might have been a bit of a repeat of what I've shared with you. And hopefully, with it being a repeat, it sunk in a little better. I had to hear it a few times. This is one of the guys, if you were here last time, that I mentioned that told me to start buying silver in 2008, and I didn't listen. I'm listening now. So that's about it. Thank you. We're good.
So this is the